Hello all, myself Dr. Priyanka Ghosh, Assistant Professor from Department of Commerce UG, Kristu Jayanti College Autonomous. Today we are going to discuss about Module 4, that is Company Final Documents. In Company Final Documents, today our topic is balance sheet. In balance sheet, we will first discuss about the concept of balance sheet. Then in balance sheet, we are following some headings. So we will discuss about what are the headings are there in balance sheet, as well as we will try to do some of the practical problem from balance sheet. So let's start with the introduction of the balance sheet. So before going to do the balance sheet, first we will learn about the final accounts. The final accounts, it is being prepared by all the kinds of companies like sole proprietorship, partnership as well as the joint stock company. So sole proprietorship means the companies which are having only one owner. Partnership means when two or more friends, they are joining together, they are doing the business, that is known as a partnership. And joint stock company, that all are the limited companies. So final accounts can be prepared by the all kind of companies, but as per the company's law, partnership and joint stock company has to prepare it compulsory, but it is optional for the sole proprietorship. So when we are preparing the final account, we should know why we are preparing it. So we are preparing the final account to get a clear picture of the financial position of the company. So how company is doing, what is the profit and loss situation of the company, and what is the future prospect of the company. Along with that, the final account also helps in providing different kind of informations like how the company's management is taking decision, how the work culture is there in the company, and what are the different kind of investment decision has been taken by the management, and what it has the effects on the company's financial position. So these all information has been provided by the final account. So the main objectives to prepare the final accounts are, as we already discussed, to find out the profit or loss earned by the company for the specific financial year, to get a clear picture of the financial position of the company, and to provide various kind of financial informations to the outsiders. Outsiders means here we are talking about the shareholders, we are talking about the investors, and we are talking about the any other kind of third parties. So let's talk about the different components of final accounts. So when we are preparing the final accounts, it is a consisting of three kinds of account. First one is trading account, second one is profit and loss account, and last one is balance sheet. So if we want to prepare the balance sheet, first we need to prepare the trading account, then profit and loss account, and then we should go for the balance sheet. So what is the trading account? Trading account means when we are doing any business and any kind of expenses which are directly related to the manufacturing of the product, that all are recording into the trading account. Like any kind of purchase, any kind of expenses which are related to the purchase, sales, any kind of income which is directly related to the manufacturing of the product, we are recording in the trading account. From trading account, we are calculating the gross profit. After calculating the gross profit, the same gross profit has to be transferred to the profit and loss account. And in the profit and loss account, we are recording all kind of indirect expenses. Indirect expenses means which are indirectly related to the manufacturing of the product, like office expenses, salary provided to the employees, any kind of interest we are paying. So all the indirect expenses we are recording to the profit and loss account. After recording the profit and loss account, all kind of indirect expenses, we have to calculate the net profit. After calculating the net profit, the same net profit we need to transfer to the balance sheet. And in the balance sheet, we know that we are having two sides, one is asset and another side is liability. So in details now we are going to talk about the balance sheet. So before going to how to prepare the balance sheet, what is the different kinds of formats we are having in balance sheet, first we need to know what is the balance sheet is all about. Balance sheet, it is a horizontal statement with the details of assets and liabilities. So balance sheet basically is having two parts, one is asset, another one is liabilities. So in balance sheet normally we are recording how much money has been invested by the owner, how much money we have taken as a loan from the bank, as well as what are the different kinds of assets we are having and any kind of investment. All the details related to assets and liabilities we are recording into the balance sheet. So mainly in balance sheet we are having two components, one is liabilities, another one is assets. But in under liabilities and assets also we are having some sub-components. So before going to the format of the balance sheet, we should know about the sub-components. So first let us know about the sub-components under liabilities. So under liabilities we are having mainly four sub-components. First one is capital. Capital means it is the initial amount invested by the owner. Next subheading we are having reserve and surplus. Reserve and surplus means it is an accumulated profit which is being transferred from our net profit to the reserve account. So during the previous all years if we earned any profit, a part of the profit we are transferring to the reserve and surplus account, and the same amount we are showing into the balance sheet. Third heading what we are having, that is a long term borrowings. Long term borrowings means here suppose the company to run their business smoothly, if they have taken any loans from the financial institution or bank, whether it is short term or long term, all the loan amount will be recorded under long term borrowings. And the last heading under liabilities what we are having, that is a current liabilities. So current liabilities are those kind of obligations which are short term in nature. So short term means easily we can pay this kind of obligation within 1 month or only or 2 months. So like example we are having the creditors, bills payable, outstanding expenses. So these are the different kinds of items we are having under the current liabilities. So under liabilities we are having four headings, that is a capital, reserve and surplus, long term borrowings and current liabilities. Let us check what are the subheadings we are having under assets. So under assets we are having mainly three subheadings. First one is fixed asset, second one is investment, and last one is current asset. So fixed asset means it is indicates all kind of resources which are the owned by the business, like land and building, plant and machinery, furniture or any kind of license, patents, know-how. So these are the assets for the company and it all records under the fixed asset in the balance sheet. Second subheading what we are having, that is a investment. So investment means if the company is going to make any investment in any other company, that is whether it is a short term or long term, that is coming under the investment in balance sheet. Last subheading what we are having, that is a current asset. So current asset means it is a short term in nature and easily we can convert it into cash, like closing stock, cash and bank balance, any prepaid expenses. Prepaid expenses means if you are paying any expenses before the due date. So these all the items are coming under the current asset. So next, before going to the format, we are just going to talk about the limitations of the balance sheet. So yes, balance sheet is having some of the limitations. First limitation is it is static in nature, means it is a fixed in nature. So it cannot be flexible, we cannot change the headings, we cannot change the format. Second limitation is that it only indicates the financial position of a company. So it only indicates whether the how much company is earning the profit and whether the company financial position is good or not. only it is showing that, but what is the effect of any decision on the company's profit or company's financial situation, these all important information they don't reveal. Balance sheet sometime will not provide two picture of the financial position of a company. Yes, there are some instances in India where we can see that there are some information are hidden in the balance sheet. So we can easily tell that balance sheet will not provide sometime the true picture of the company. So last we will talk about the format of the balance sheet. So this is the basic format of the balance sheet, and in final account whenever we are preparing any trading account, profit and loss or balance sheet, always we should start with the date. So you can see the before format I have written balance sheet as on. So as on means here we need to mention the date. So here we need to mention the last date of the financial year. So our financial year last date is 31st March. So 31st March 2024 or 2025 we need to mention. So balance sheet is having two components, I already told. Left hand side we are recording liabilities and right hand side we are recording the assets. So in liability side we need to start with the capital, and under capital always we need to start with the opening balance. With the opening balance we need to add the profit, and if the company is earning any loss we need to minus it. And from there, if the owner is withdrawing any money for his personal purpose from the company, we need to minus it, that is known as a drawing. And along with that we need to add interest on capital. Interest on capital means if the company is providing any interest on the owner's capital, that we need to add it, and the net amount we need to write on the amount column. Along with that, next heading is loan. Any short term, long term loan we need to record here. Third heading is that current liabilities. Under current liabilities we can record the creditors, outstanding expenses, any bank overdraft. So these are the items coming under current liabilities. After recording all these items we need to make the total, and then we need to move into the asset side. In asset side we are having mainly three heading: fixed assets, investment, current asset. So under fixed asset, whatever assets company is having we need to record, like land and building, furniture, goodwill, plant and machinery, or any kind of license, patents we need to record here. Then next heading is that investment. Any kind of short term, long term investment we need to record here. Then last heading is that current asset. Under current asset, all the short time period assets we need to record, like closing stock, debtors, cash and bank balance, bill receivable, prepaid expenses, and then any kind of miscellaneous expenses or any other type of short term expenses or assets we need to record here. After recording all these items we need to make the total. And the main thing for the balance sheet is that if the assets side total and the liabilities side total will be always equal. So if it is not equal means we can understand that there is some mistake while preparing the final account. So this is the format for balance sheet. I hope I have made a clear understanding for the balance sheet. Thank you.